Okay, welcome everybody. Midweek update time. Joe with you here. It's the 22nd of October, getting closer to the end of the month. I like Halloween, but it looks like the markets are already spooked. That's a joke. Just a lot of volatility out there. All right, you guys know how this works. We're to share ideas. Make sure you take responsibility for whatever you decide to follow along with. We'll go through the meaningful news of the day, take a look at the broad markets. We'll also take a look at stuff technically and see what's been moving. And if we've got trades out there, I'll share them with you.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So on our market outlook, it's super volatile. We're still kind of holding on to the move to the upside. It's been kind of jumping around, and I've been seeing that earnings news and the reaction to it is adding to the volatility. In fact, I believe it's kind of the main driver as such. We've been talking a lot about the government shutdown and some of the economic numbers that we would expect that we're not getting, and it seemed to add a little bit more volatility to the markets, kind of jumping around. And yes, folks, I understand the irony. When I wrote government shutdown optimism, I laughed out loud, but that's kind of where we're at, thinking that a deal could be made and we could see it reopen here pretty soon, which is interesting because we are scheduled for a CPI here coming up. I'll show you here in a second, which I'm wondering if the reaction to any economic number, good, bad, or ugly, is going to be kind of overblown. But I'm still leaning a little bit more towards earnings and the majority of the reactions we've seen on some of these larger ones, and we're just about to get into it. These are some really big moves, big reactions, things like that. Big retracement in gold. We knew it was inevitable, right? We always say, the rubber band theory here. We talk about Maverick. You stretch that thing in one direction, it's going to snap back. Gold setting high after high after high. Maybe a little bit of, okay, maybe we should take some profits there, and it comes down pretty fast. We'll take a look at that chart as well. But it's just a lot of positioning, pulling stuff out, big moves, big gaps, things of that nature. So the volatility's not slowing down anytime soon. So I'm going to keep our weekly at the -1. I bumped it up to a +2. It's because that last bump up actually put us above the 20. We'll look at the chart here in a second. But it's still a very, very choppy market, as some of you guys, as we've all seen. So here is our really beefy economic calendar, and the idea is, are we going to get these numbers? The CPI, I think this is the one that's going to be focused on. We haven't seen this in a little while. We know that inflation's been a big deal, even though the Fed and Powell came out and said, we're not worried so much about that. What we're worried about is, the spending when it comes to the consumer and jobs. That's their main focus, thinking that they might need to stop or slow cutting rates. It's not really having the impact on the markets that it did. I think that the main focus over the last week or so, because we don't have these numbers, could be just those earnings and earnings results and some news events, right? AI is still out there. Things like that are actually driving the markets up or down. So we'll see if these numbers come out or not. But that's kind of something to look forward to when it comes to Friday. If that's where we're sitting, well, what can we do? Well, let's just jump out to what the markets have been up to as of late. This is more of a little bit of a spill-off. Now, it's pretty simple to take some of these larger companies when it comes to earnings. So the NASDAQ's down about 0.9%. So let's just jump straight into the heat map of our, this is the S&P 500. These are the larger companies. But you could see PLTR is down 5%. Netflix is the big one today. That had its earnings down 9%. And these are really heavy weighted stocks. Apple slid a little bit. You guys can read these. See the darker red. You've got Google up and some of the healthcare doing pretty good. But take a look at AMD and Micron. Texas Instruments, that was a big one. But, AMD and Micron had these really healthy, big surges when it came to AI deals. With other companies. And so when I see these pullbacks, they look big and they're huge, and they have a huge action on the overall market, but they are coming from extended highs. And we're kind of seeing that same thing in gold. Now, it does create a very volatile market, but one that could be expected. Just keep in mind, folks, kind of that rubber band theory I was talking about earlier. So let's just take a look at our SPY chart. We'll start there. So as I zoom into it, I'm just trying to focus on the shorter term here. This was a pretty good surge, a little bit of a consolidation over these last few days. We talked about this last week saying, I really think this was a volatile move here. But since Friday, this has been a lot more volatile. And I think it's just because there's less to go on. Think about it. Government shutdown. We don't have economic numbers. We got a Fed that's a little bit paused. And now we've got reaction to some of these larger companies that some are missing. We'll see if some come in line or they beat. And so we're getting some reactionary, more jumping and chopping. Now, the overall motion is still up in the higher end. So it was easy to jump that back up to a +2. But I just don't like the last few candlesticks here. We got a flattening 20-day moving average. It looks like it's going to be chopping around. And guess what, folks? I expect a lot more of the same outside of just reaction to earnings. Let's start with MCK. We're looking at, and be mindful of earnings. They're out there. See, I'd like to scoot this chart forward so we could say, look, there it is. It's coming up. We've got ourselves a 785, 790 bull call spread, mostly theta, as it runs into reporting earnings the following week. Okay, nice. Okay. October 31st. So we've got about 2 weeks. Well, a week and a half because today is Wednesday. So here's that 785. Let's take a look at the 790. You're super tight. You're just above it right now. And the idea is, look, hey, Joe, I just want this thing to just kind of meander up sideways from here. It looks good. It's a strong chart, right? Very aggressive, super volatile, shooting up. It seems to me you're going to carry this just right before its earnings. It's going to continue to do this, I believe. But a nice tight spread. I know $5 doesn't seem tight, but it is in this. You just kind of have to let itself play. You just got to let it play out. But cool approach. Thanks for sharing. Nice trade. All right, let's go to another one. MSTR. We were taking a look at this for a bear. Rob actually talked about this yesterday, and you can see it actually had a little bit a gap down, and it's rolling lower. So a good trade. We're looking at kind of a bearish to sideways trade, somewhere between the 320, 310, 300, 310, 290 area. I like it. I think it's a good trade. It still looks pretty good here. Let's move a little bit forward and see if it's got some earnings coming up. It does. So this might be a trade for the rest of this week, something that you might want to avoid when it comes to going into its earnings. So is this something I can take advantage of over the next few days? And if the answer is yes, you can give it a shot. If the answer is no, you got to find something different. Trade here. This is SEZL. Taking a look at this, Dave. So bear call with a target of 70. It makes sense. I mean, that's super tight too. You're not asking for much. It goes back to a nice little gap area. It's already kind of halfway down there. Now, depending on what your risk reward was with the target that tight, today's action, I mean, it's down about 4%, down $3. Might have taken up the majority of the meat off the bone that you were trying to get. If you're in that situation, then it's best to pump the brakes. So, run that through your plan. Has it exceeded my target? Is it eating up the majority of my gains? And or if you're playing something sideways, are my probabilities decreasing? If any of those things give you kind of a red flag, it's best just to let it go. But I like the pattern. I do, depending on just how much meat is still left on that bone. All right, let's move over to gold and silver. Let's just take a look at, I use GLD. There's a tons of different ticker symbols, GDX, GOLD, whatever you want to look at. I'm just going to throw this up. And the idea is it's an overextension, a big gap up. And if you were to take out that this is a commodity that's just been on fire and try to chart this thing, this is an absolute blow off top. It's a blow off top. It's extended above its moving averages. You can see throughout this whole line here that it's extended above that 20-day moving average. Well, maybe stop there, but it's extended above that 20-day moving average. A little bit of reluctancy here, and then a gap up. And this gap up actually shot higher, I should say. And we refer to this as kind of a blow off top. The next move is a move to the downside. So how do you chart it from there? Well, now we got to start trying to identify where it's going to bounce. We refer to this as trying to catch a falling knife. You never want to do it. However, you do want to try to identify potential areas that it could stop. Now, what's difficult about this is the move that it had was gap, 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 gap. And now I understand, folks, I'm using an ETF, which, gold does have futures. It trades all the time, so it does gap to retest. But you can see areas of consolidation that we could see. Now, right now, the gap that it's down at is actually at a pretty good push-pull that we saw earlier this month. The next level, I think, would probably be this island here. And then we're going to go, I'd probably go all the way back down to this area. It is definitely due for a break. It was due for a break. It was due for recovery. I don't know if it had anything to do with some of the earnings that have been popping around. Maybe, hey, the government could possibly reopen, because this thing has been on a really nice March move since the shutdown rumors and the shutdown. Also, since we've seen, some of the cryptocurrencies have been dropping, things of that nature, a pretty strong flight to safety, which seems to me is just in the shorter term a little bit over. Let's take a look at silver, since we don't do that much. I'd expect the exact same. And yep, it's doing the exact same. So it's one of these things. It's just a run that's been pretty strong. It started kind of at the same time the markets got a little bit skittish, a little bit of worries out there, but the markets really weren't punished. Right? We've even seen volatility, but it still kind of went higher, where these just went gangbusters. So I would let these play out. Let's see what happens to these over the next little bit, especially as we get through earnings, and just kind of see where everything falls. And we're also going to be interesting to see when the government opens, because we'll see some of those economic numbers as they come out in the reaction to that. Now let's take a look at a couple that we've had. And once again, let's start with Victoria's Secret. This is one that we've carried forward for a while, but it's just been this really slow, steady climb higher. We're seeing that in some of these consumer cyclical stocks. Here's Macy's. Macy's is one. I know that it had a buyout rumor a while ago, but it's starting to move a little bit higher. And I don't think it's going to have too much to do with whatever numbers they post. I think it's the buyout rumor and the expectations of that has kept this going forward. And then MNST is one that I've had back and forth on my watch list as well. And it seems to be hanging in there. So there are some consumer defensive. I'm seeing some consumer cyclical out there. Be mindful, though, of when their earnings are. I should just put asterisks on all of our picks today. But it's pretty difficult to put anything on for more than a week and a half now, especially through earnings. So the overall idea, I guess let's just summarize this real quick, is earnings. Everything's driving, guys. Once again, take a look at this heat map here. 10% Netflix is down, PLTR. I mean, AMD, Micron, Texas Instruments was the one that announced, but take a look at the sympathy moves going on with some of these large chip makers. So just be mindful of that. Sympathy moves, larger volatility, bigger range, and we're going to have some pretty different expiration cycles when it comes to week to week to week. Be mindful of when your stock or the trade that you want to build expires. Build around it, build after it, but know that if we're going to throw some darts, we've got a very small dartboard that is actually starting to move all over the wall. So be expected to actually completely miss it or just hit a grand slam, especially going through the earnings. So we'll see what happens when it comes to the government, if it's going to reopen, if we get some of these numbers that come out. And I'm going to be surprised to see some of the economic reactions to those numbers. So here's the trades. And I really didn't want to do too much. I don't like the earnings season, but thanks for sharing, and I like it. This is more of kind of a conversation of, sticking to your plan. So look at this. Victoria's Secret still hanging in there. I like Macy's. MCK's got earnings. MSTR from yesterday. Nice bear move. Still looks weak, but it's got earnings coming up on the 31st. So not a whole bunch and lots of volatility. You don't need to trade every week. I think it's cool that we check in. I think this class hopefully is super helpful, even when it just comes to maybe I shouldn't be trading versus ideas to trade off of. Thanks for showing up, folks. Thanks for participating and sharing your trades as always. All right, guys, we'll talk to you next time. Bye, everybody.